Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar today is titled Micro Investment. Start investing with your spare change. So hello, everybody. This is Shane Chu. I'm the moderator for this session. Now, this session, we will talk about micro investment. Now, how many of you here always have spare change? And you find that this spare change sometimes is a bit more burdensome, like especially come in the form of coins, right? In this session, our speaker will share with you why we should not underestimate spare change and how we can make the best use of them by doing micro investing. As usual, disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. She's none other than Miss Azna Ashad. So Miss Azna is a licensed financial planner with Philip Wealth Planner. She's also a certified financial planner with FPAM, a certified trainer by HRD Corp, and she's also the secretary of the FPAM Johor chapter. So we are very pleased to have you here, Miss Asna. How are you today?
Hi Shane, I'm good, Alhamdulillah.
All right, cool. Great to have you here. So we can't wait to learn from you about how do we do micro investing. So I'll hand over the session to you.
Right. Thank you, Shane. Thank you for inviting me. Hi. Hi everyone. Hello. Thank you for spending your Friday night with me. Maybe to actually gain some knowledge. Just a sound check is, can you hear my voice? If you can hear my voice, just type 1. Hi Calvin. All right, okay. So your Fat said 1, you can hear my voice clearly, all right? Okay, so before we begin, maybe I just want to know some background of my audience. Maybe, can you just tell me, what range are you? Let's say, for example, are you early 20s to 30s? If you are early 20s to 30s, then type 10. If you are 30 to 50, then type 20. And if you are above 50, then okay, Charlie said he's retiree. Okay, so I just want to get to know my audience. Okay, Ezra said 20. Mr. Wong, 55, more than 55. Calvin in 20s. All right, good. Retired. So we have a mix of audience here. All right, 17. Oh, Trevor, 17. Okay, so the youngest now. All right, Miss Juan Rosalina is okay. All right, okay, good. Okay, so I'm curious. Okay, let me share my slides. I hope that throughout our 1.5 hour time spent together will be beneficial for you. Okay, let me. Okay, sharing. I need to share slide. Okay, so okay. All right. Okay, bear with me. Yeah. Okay, my name is Azna, as how Shane has introduced me. So basically, for today, this will be the learning outcomes. So what I'm trying to actually achieve, maybe one of it, for you guys. So the first one is basically for my audience to actually understand the concept of micro investment and how it helps in cultivating the habit of investing. But maybe, for those who are at the golden age, above 50, it's no longer about the habit of investing, but maybe you are looking for, diversification, or, the better usage of your resources. So the second one is, how does the advantage and disadvantage of micro investment compared to the traditional investment? So for the young one, traditional investment basically investment like real estate, buying properties, like stocks, purchasing stocks, mutual funds. So that is basically the traditional investment. So micro investment is a new investment, a new type or a new model of investment that is available in the market. And the third one is basically to learn about micro investment or micro investing platform that is available in the market and available in the Malaysia, and guide to actually how to start. You have learned the theory, or you have learned some knowledge. How do you want to start investing with micro investment apps or micro investment platform. And the last one basically maybe to discover how to actually create a diversified portfolio to build long-term wealth. All right. So by end of this webinar, you will have a clear understanding of micro investing, and maybe for the young one, be well prepared to take your first step in investment world. All right. So what is basically micro investment? You have heard investment, but the term of micro. So micro means small. So basically, simply put, micro investing basically allows you to invest small funds of money, often as little as a few cents or a few ringgits, that to fulfill your long-term or short-term investment goal. So your investment goals can be, saving for the young one, saving for your rainy days, your emergency fund. For the middle 30s, will be, trying to save for your first house, or child education fund. And for the old one, maybe, just to make sure, not for retirement per se, but then, just having another pot of money aside. Okay. So in Malaysia, basically, micro investment can be relatively new because it was introduced back in 2020. PNB started it, and as a part of government initiative that leverage digital experience, because now everybody is holding a phone. So, and a lot of fintech, financial tax is actually coming up. So they want to leverage on that, and to encourage Malaysia to actually save and invest. So now that we understand what is basically, so far so good, yeah. So far, I think that is very simple definition. So we have understand the definition of it. We want to know what is the difference between the micro investment and traditional investment. So the first one, which is capital to actually start. Maybe you will require thousands, or maybe for some investment it can be millions, to just get started. So having a larger initial capital will actually hinder people who just start earning, young graduates to actually start investing. So like traditional investment, like property, real estate or properties, for example. So let's say you are buying a house of 300,000, you will actually need 10% of the amount, or the value of the property, 30,000. On top of it, you also need to prepare about 3% of fees, for lawyer, for LHDN. So for your broker to actually, be able to enter into investment of real estate properties. So it will take longer time for you to actually start as compared to micro investment. You can start as minimum as 10 ringgit, or you can actually use your spending. You are spending, let's say 35 ringgit, and they round up to 36 ringgit. So the spare change can be accumulated to actually start investing with a minimum requirement. Okay, so the first one is basically the investment amount. So the second one is maybe you don't have a substantial amount of disposable income. Maybe you don't have your after your income minus your expenses, your surplus might be very small for you to actually make a regular investment that may require to you to actually chip in regularly every month 100 300 ringgit. So you might not have that. So micro investment allows you to actually investing as and when you please, right? So the second one is basically the accessibility. So traditional investment usually require the assistance of someone else to actually help you to start with. If you are talking about, okay, go back to our real estate investment, you need a broker, or you need a lawyer, or you need an advisor, or someone to actually advise you. For stocks, you need remiser. So you always need an intermediary to actually help you to start your investment. So it also involve a complex it also involve a lot of complex processes. You cannot just decided, oh, okay, I have a sum of money, then I just want to start investing. No, you have to have a process of profiling, or purchase, sales and purchase. You go to the lawyer, and then you go to the bank. So there's a lot of processes for you to start. So as compared to micro investment, you can just use your devices, your phone, and then register, and then put in money, and then you are already an investor. So the accessibility or the ease of you to actually start makes micro investment an interesting alternative for you who may be keen to start investing. All right. So the third one is the fees and charges. So traditional investment, like I say, may involve higher fees. Not only when you purchase, but also after you purchase your investment, because there is a maintenance fees or management fees. There's a lot of fees and charges involved. So it will actually take you a longer time to actually recover your initial investment. Whereas micro investment usually have lower fee, and sometimes a zero fee, and then it will be cost effective for small investors. However, there is a downside of it, but I'll share with you later. Okay. And the fourth one of the comparison between micro investment and traditional investment is the liquidity. So for those who are not familiar with liquidity, meaning that liquidity means the ability for you to actually um, um, sell off, or convert your asset to cash. For example, if you want to sell something, you are able to actually, if you want to sell something, you are able to get the cash within a short period of time. And when I say short period of time, you are talking about 1 week or 2 weeks for you to access your cash. If let's say you are in need of money, you want to sell off, okay, you can get that within 1 or 2 weeks. Or if you want to buy, let's say you are holding a sum of money, you can immediately buy and hold the asset within a short period of time as well. So so for traditional investment, it will require a longer holding periods, and may not be as easily liquidated, because you might For example, if let's say you are buying gold, you might want to know whether the purchase price, but gold can be liquidated as well. Sorry, of house again. Again, the example of house. If you want to buy, there's a complex process, and you might need to take a longer time for you to actually assess your money. Yeah. So, but micro investment typically usually is more liquid and it allow customer to buy or sell quickly. All right. Okay. So that this is basically the four significant difference between traditional investment and also the micro investment. Okay. If you have any question, you can actually share the chat where then the Shane will actually raise out the question later, or as and when you want to know to ask something, just write it in the chat. Okay. Okay. Next, so how does micro investing works? So usually investment or micro investing is offered through robo advisory mobile and web ads or e-wallet. Okay. And then based on the chosen platform, so usually the money that you chipped in or the money that you contribute will be took into a pool of fund, and then this pool of fund will be as a collective investment, because let's say for example 100,000 people are every month or every day contributed a sum of money. So that pool of money will be invested to investment scheme like unit trust or ETF. So ETF stands for Exchange Traded Fund. I will explain a bit later about unit trust or exchange traded fund for those who are new in investment. And the investment strategy or the investment varies from a range of different asset class. It can be in money market, it can be in gold, it can be in commodity, it can be in stocks. It can differ, or it can varies from different sector. It can be in healthcare, it can be in technology, it can be in consumer, it can be in retails, it can be in banking. So it varies. And geography as well, because it can be in Malaysia, the investment itself. I mean, you are investing in invest unit trust in Malaysia, but the unit trust or the ETF itself can have exposure in other countries like Malaysia, like Asia Pacific, like China, like developed market like global market like US, UK or Euro. So so it varies. It depends on the fund provider to offer you which investment or which asset class that is available. Okay. And investors can actually have the option whether they want to do round ups. Like I say, you purchase something and then you set a certain amount, or you round up to a certain amount, and that balance will be put into your investment account. It can be regular investment, it can be on daily basis, it can be on weekly basis, it can be on monthly basis. It depends. Or it can be a lump sum investment. You just put one single investment and then that's it. So it doesn't affect your cash flow. For example, you receive your bonuses or extra money or your overtime that you don't want to actually touch. You can just take that extra money and just put into this account. All right. And next month you decided, oh, I don't want because I want to go holiday, or I don't want, or because it's Raya or Chinese New Year. Okay. They allow you to do that. All right. So it gives that kind of flexibility. So, like I said, micro investment tools is they choose unit trust. So what is basically a unit trust? So unit trust is a form of collective investment that enable investors with similar objective to pool their funds. So objective can be for capital gain, or it can be for dividend basis. And then this fund will actually managed by for professional fund manager, which will select the asset class that they want to invest in. Okay, maybe according to your risk profile. So and then they take and then like I said just now, it may include various assets. All right. So like cash, bonds and deposits, shares, properties, commodities. And basically unit holders or you as investors do not own the stocks or the security in the portfolio directly. You are called as a unit holder. You are owning the unit but not the stock. For example, in unit trust, they invest in a company like Maybank. You are not the shareholders of the Maybank. You are just the unit holder of that fund. So the return on the investment of the unit trust can be in two ways. One is basically distribution, income distribution, and another one is capital appreciation. So capital appreciation means that you're buying at a low price and then you sell your investment at a higher price to earn the profit. The next one is exchange traded fund. So exchange traded fund works similar like unit trust because it's a collective investment, but it is it compared to unit trust, they need to outperform an index. You know, the fund manager mandate or their performance is evaluated to outperform the index that they follow. But each ETF basically they just will copy or follow the index that they benchmark. Okay. Or the commodity. So they just follow. They don't outperform. They just follow. And then unit trust usually is sell through invest asset management investment or asset management companies, like the one that you are familiar with, like Principal, like Public Mutual, like Philip Mutual. So investment or maybe the one that like online platform like iFast. But for ETF, it is actually bought and sold at an exchange. So you need to open a CDS account. But as a micro investment, if let's say you are ETF investor, but for micro investment, you don't have to go there. You just have to open an account and then you just select like Wahid Invest. They actually they have ETF exposure. So you just open an account with Wahid and then you have that ETF exposure without going to hassle of opening a CDS account, finding a remiser and something like that. So again, their returns can be in two ways. It can be either in capital gains or it can be also on dividends. Okay. ASB, ASN, ASM under PNB can be considered as a micro investment. No, ASB, ASN, ASM is basically a unit trust. But then one of the micro investment portfolio has an exposure in ASB, ASN, ASM. Because like ASB and ASN, ASM, you need to invest if let's say you want to invest regularly, you need to at least invest 100 ringgit per month. But if let's say you for lump sum, you need to invest 1,000. 1,000, you have to put in 1,000. If let's say you invest directly in ASB or ASN or ASM. But for micro investment, you can start with as little as 10 ringgit or 5 ringgit even. So that is micro investment, meaning that a small change, a small amount, you can start with a small amount that you don't realize that. Because now, 5 ringgit, if you go outside, right, if the moment that you step out of your house, you will spend easily 50 ringgit. You don't really see that 5 ringgit or 10 ringgit basically. So you want micro investment allow that amount that you don't see to be parked into a more productive, rather than you put 5 ringgit or, or 10 ringgit you put lying around in your house or under your pillow. You put it lying around, or such your 1 ringgit, must be somewhere lah under in your car. I'm sure that if you go to your car and then you dig up, you can find some money inside there, easily 10 ringgit. So that amount that lying around, rather than not being utilized, you put it in micro investment, because when it accumulate, it can give in the long run a substantial amount. Okay, I hope that um answer your question. Okay. So who is ideal for micro investors? So the first one is beginners with basic investment knowledge. You don't know how to start investing. You don't know where to start investing. You don't know what kind of investment that you should go. You don't know whether this investment is valid or not. So micro investment is suited with people with basic investment knowledge, that don't know investment strategy, that don't know how to actually manage their investment. So and doesn't have a very large amount to actually begin with. So is micro investment is ideal to actually for people with that. Also micro investment is for people who don't have extensive time, or to actually, they have knowledge, but it's just that their work or their commitment actually is high enough for them to actually focus on their job or their career, rather than spend their time to actually analyze the market, analyze the investment performance. So they don't have time, so they just want somebody else to actually manage for them. So so micro investment actually is also good for people who don't have time. And micro investment also good for people that is tax savvy. You just want everything on your fingertip, slide and everything kan. So everything apps is ease of use. So you want that. So it's also ideal for tax saver tax savvy people, also an ideal investors. um those who don't have a saving habit, you feel that, oh my god, you are not investing, or you are not saving, you are just parking the money. You put a sum of money every month. When you receive your paycheck, you put a sum of money in this investment account, like for example, like just now ASB. But because now you have apps available, at the end of the day, you feel like, oh my, I have overspent. I don't have enough money to actually for my before my next paycheck. So you will actually tap into that market and then take it out. So so yeah. So it's also good for people to actually start the habit of saving or habit of investing. Okay. All right, next. So what is the pros and cons? I think I have touched some of the pros and cons when I shared, but just I would like to just go through. The first one is low entry cost. You can start 10 ringgit. They low risk with diversification. So diversification means that you put your investment money in a few baskets, so that if one basket, let's say for example, let's talk about geography. If let's say Malaysia is not performing, you can go to another um basket in maybe Asia Pacific or global, or maybe in sectors. For example, during the COVID, tourism sector is doing badly, so you go to um Healthcare is doing great. So when you do micro investment, they already have a diversification, so it will lower your risk. Okay, it has flexibility. You can choose whether you want to do regular, you want to do lump sum. Okay, automatic saving. Okay, automatic saving basically will actually one of the recommended way to actually for you to build a habit of investing or habit of saving, because once automated, the moment that you receive your paycheck, a certain amount of money automatically deducted without you realizing it. So it will actually unconsciously or subconsciously helps you into building a fund. So okay, encourage investment habit requires simple investment knowledge. So let's go to the cons of micro investment. Okay, I said that it has a low fee, but usually micro investment also have a regular fee. So for example, let's say you have a certain amount, they have a threshold, you have a certain amount below their threshold, they will actually charge monthly administration fee, they say, you know. So if let's say you don't invest regularly, you just put one lump sum that is very minimal, let's say 50 ringgit or 100 ringgit, very minimal lump sum investment, although it allows. But then if let's say after that you don't put in every month, so the cost or the administration fee will eat out your investment. So uh, example for 50 ringgit, and then they charge administration fee 1 ringgit 50 cents. So or 100 ringgit they charge okay, let's say 100 ringgit to make a comparison with unit trust. So in unit trust, if you invest 100 ringgit, there is a sales charge of 5%. So 100 ringgit, then 5 ringgit will be deducted. That's it. There is no monthly management fee. So 5 ringgit. But if let's say you put in micro investment 100 ringgit and then you don't put any additional amount after that, every month they will deduct 1 ringgit 50 cent. For example, the company decide that they will actually charge you 150 cent for administration fee. So by the 6th month, if you don't put any additional money, they will already deduct you 9 ringgit. 1.5 multiplied by 6 is 9 ringgit. Or after, or if you don't put for a year, it's already 18 ringgit. So that is already 18% of your initial capital. So the fee will eat out if let's say you don't put it regularly. The second one is it have limited investment option. It's only in trust in ETF. You don't have exposure to other investment vehicle, and you have limited control on investment. You just pick like a la carte one. Uh, I want or not a la carte set. Either this one, or this one. You don't have customization according to your risk or your needs. So you have limited control on investment, and then there's no personalized advice in investment. Basically, you need some sort of advice in terms of setting up your goals, analysis of your cash flow, your surplus, your spend, your income, so people need to analyze, out of 100% of your paycheck, where goes, how much will actually goes to your commitment, your loans, how much should be for your investment, how much should be for your expenses. So you don't have personalized advice. So you don't know whether, let's say you just you start investing in micro investment, you don't know whether the amount that you save or the amount that you invest, whether does it enough, does it sufficient, does it fulfill your financial goals that you set, or for short term, for mid term, for long term. So you don't have that kind of personalized advice. When you don't have that kind of personalized advice, over the long term, you realize the moment, let's say for example, you want to set up for your wedding for the youngsters, right? You want to get married. So after 5 years or 10 years, you just regularly invest without knowing whether it's sufficient or not. After 5 years, when you want to get married, you have a sum of money, but then you realize not enough lah. you lost the time horizon for the period that you invest. Whereas if let's say you have assigned, or if you have met a financial planner, or if you have talked to a unit trust advisor, they will actually say, okay, what before you begin, what do you want to achieve with this amount? How much you want. So when you set that, they will actually analyze for you how much you actually need to chip in for monthly. So for retiree, for example, let's say you have a sum, maybe your EPF money, or your gratuity if you're a government servant, you are looking to actually preserve the amount. But then when you put in micro investment, whereby you can actually put some of your micro investment to give you a passive income, uh, but you don't know how much you need to actually sustain for the amount that you need uh, on your yearly or annual basis. So then the moment when the return came out, oh, it doesn't match because the return is does not meet your expectation. All right. So that is the downside of micro investment, because it's you and a robo advisories. There's no customized, because investment sometimes need a human touch, basically, because it also involve, or it also link with your financial behavior, which computer or robo advisories cannot uh, not reach that moment to actually understand your behavior as a human. All right, and the last one is insufficient for long-term goals. Like I say, if you don't have um, a personalized, let's say, for example, let's say you decided that um, I'll share you a financial calculator. Calculator. So let's say you decided that you want to round out every day 2 ringgit, 2 ringgit of your spending every day, 2 ringgit to your micro investment. So the amount is 2 ringgit. So for in a month, in 30 days, it will be 260 ringgit, right? So 60 ringgit. This is, for example, for youngsters, yeah. So you chipped in the money for, let's say, for example, short term period for about less than 3 years, let's say 36 months, and then give about 6% interest rate, and the dividend or distribution is given annually. So if you calculate after 3 years, the 2 ringgit that you chip in every day will be, at that time after 3 years, 2,366. Not bad. As a youngsters, after 3 years, this might be, for your emergency fund, as a start of your emergency fund. Let's say you don't review, you just focus on this micro investment. You feel that they are working perfectly with you. You don't realize that they what do you want. So you just put in for the next nak kahwin kan. Let's say you want to get married in 5 years time, 60 months. So you feel that, oh, I think I have an investment that I can touch on when I want to get married. So after 5 years, the amount is only about 4,189. That is 5 years midterm plan. So do you think that is enough for you to start get married? Maybe if you make it simple, you just go to registration of marriage and then just got married. That's it, without any wedding. So but usually people want to have some sort of celebration, right? So this amount might not be enough. So it's insufficient in a long time period. So let's say if again you have that attitude that I just have this micro investment because it was so easy. I don't have to actually learn about investment so much. They do everything for me. Just, let them manage my money. So you do this for 30 years. So you start in when you are 20, you do it when you are 30. Let's say you start with 25 and then you do it for 30 years, which is 55, age of retirement. So for and you think this is sufficient for your go back to the slide. Um, Micro investment is good for you to start, but in a long time, a long period of time, it might be insufficient. Okay, let me share again my slides. Is there any questions? Are you all guys okay so far? If you are okay, if you feel that you so far so good, just give me um uh uh a 10. Today is sorry, an 11 because today is my anniversary, my wedding anniversary. 11 wedding anniversary. 11. Okay, good. Okay. Okay, where do we go back? Okay. Thank you for thank you, Ezrul. 11, yeah. Okay, next. So how do we start investing with micro investing apps or website or platform? So the first one is basically you download the app and create an account. And then you connect a funding account usually to your banks, like Maybank, and then for you to withdraw the money or for you to actually contribute into the account. And then some will have a portfolio based. They will have some sort of questions for you to ask, for you to answer, and based on the answer that you give to the question, they will actually assign you a portfolio whether you are conservative, moderate, or aggressive investors. And then after that you set up your investment mode, whether it's regular or one-off investment. And then you just look at the apps. Either you just monitor the performance, whether it grow, and then whether you need to at particular time, whether you want to top up or withdraw the investment. Sorry. Let me just take a drink, a sip of water. All right, so it's easy. Again, the benefit of micro investing is basically because it is easy. Next, okay, now we have talked about all this, what it is, what is the difference, everything. So let's talk what is available in the market. So the first one is RISE. Okay, because this is an Islamic capital webinar, so I'm only going to share investment app that is Sharia compliance and investment app that meet the characteristic of one, it can be start with a low minimum amount of investment below 100 ringgit, and two, it has the feature of round ups. Okay, it can be either of these two characteristics lah. Either you can start low or you can use your spare change, like the topic of this presentation, you invest with your spare change. So I might have opt out those who are not Sharia compliance, those who are have a higher initial amount. So the first one is RISE. So RISE is basically based, it's not homegrown, it's basically from Australia. In Australia, they started in 2016, and only after 4 years, they come to Malaysia 2020, and then introduced Rais in Malaysia. And they partner with PNB, Pemodelan Nasional Berhad. So since they partner with PNB, then their offering is basically the fund, the unit trust fund that they offer, or they offer to the investors is basically PNB fund lah, like ASB, ASN, ASM, that you can start minimum like 10 ringgit, you can 5 ringgit you can start already. So and then Rais meet all these three characteristics. You can do round ups, you can invest regularly as weekly, monthly. You can also have a minimum amount. Okay, so the asset class is bond, shares, commodity, and cash. What is the return for Rais? It depends on the it depends on the portfolio that you choose, and also the asset class. So if you are in moderate, sorry, if you are conservative, then will be a lower return lah. If you are moderate or aggressive, then you can look at about 4 to 6% to depending on the market lah. Basically, aggressive will have a higher return. Okay, because Rais have a portfolio, you have to choose. There, monthly fee charge, 1 ringgit per month for account under 6,000. And if let's say above 6,000 is 0.025 5% per month. Yeah, they don't have sales charge, but they have that monthly charge. So so Rais is an example where I say that if let's say you put a minimum amount of 100 ringgit and then you don't put any more, then basically the management fee will definitely eat out your investment. So this is some of their features, their home screen lah. If you use your phone kan, they will actually show your current account value, how much the overall value, how much that you have invested, what is the market return, and also they have extra feature because they have these referrals. If let's say you offer, they have your referral code. If you get your friends to actually invest with using your referral code, then they will have a referral fee that you can, and then that referral fee can be sent to invest to your investment fund. So it's actually encourage people to, if you have that basic knowledge, you can get your friends and then you can earn from that. And then your dividends you can withdraw, or you actually just reinvest it. Invested means that you don't take that profit, you put in back into the fund to invest back. Okay, and also they have these features of projected value. This part, the third part, whereby if let's say you consistent, how much would does it change? Why my phone loading? Let me see whether they change this. Okay. Okay, it's moving. Okay. Roundouts. This is the features roundouts that you can use for spare change lah. What is the best micro investment platform currently in terms of return? Hard to say because it depends on you as an investment. If you want a higher return, then you basically need to know that you are higher returns mean there is a possibility that your capital might be, there is a capital loss risk if let's say the market is not doing good, especially if let's say in Malaysia's market right now, right? So if you are looking for a return, you also have to bear for the loss. And if you are looking for higher return, then for sure you have to have exposure in stocks. You cannot have exposure in money market because it's very okay. Um, um, the risk, the risk over return, right? So it started with money market, cash deposit on money market, and then bond, and then stocks, or it can be bond, mixed asset between bond and stocks, and it can be stocks, and then it can be even stocks also. They have stocks that can give a higher return that focus on capital gain. They give lower dividend. So if you want to have a higher return, you have to have that knowledge of how much, if you talk about stocks, for example, how much risk of loss that you are willing to actually bear, or how long do you want to hold. Kalau you nak higher return kan, uh, sorry, automatically go to Malay. So if you are looking for a higher return, then you also have a lot of people always look at return without considering the risk that they can manage. So there is a fund that can give about 60%, but now it drops. It lost to negative 30%. So when it happens to a loss, can you take it? So you want to get a return, make sure you also need to actually evaluate your risk tolerant. Yeah. Okay. If that's again, it goes back to investment 101. Before investing, you have to actually start your emergency fund first, and then you have to know your risk profile first. So in micro investment, conservative. You want a higher return, so you choose aggressive. But then when the market down, there's a lot of people that feel that investment is not good because they say that I'm having a loss. Investment is not good because I'm having a loss, without realizing that you actually invest not according to your risk profile. Yeah. So again, before investing, risk profile, and then your return over. If you are looking for higher return, then you have to actually manage your knowledge, your time horizon. A longer period of time horizon will actually lower your risk. Okay. Mm. In the market, how, if you want to go, if you ask the question, what is the best micro investment platform currently? There's no platform that can give a consistent return because it depends on the market performance. So now maybe some market are doing low, but then what about Wahid? Wahid is exchange traded fund. It's just copy the index. But again, um, index also have up and downs. And if you're talking about index, right, you have to talk about, if you want to see a good performance for index, you definitely have to go a long term period, about 10 years, 15 years to see a consistent return. If I'm mistaken, about 10% return in 10 years. So in to say that you cannot touch the money in 10 years, you have to regularly, whether the market is up or down, you have to invest regularly. So a lot of people, when market is down, they know that they have to invest, and they know that they have to take advantage of dollar cost average, but the emotional part of them will actually stop them from investing because they are afraid the market is going down, 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 down. What happened if the market is kept coming down, kept coming down, coming down? What are you going to do? Are you going to stop investing, or are you going to? So if you talk about Wahid or ETF index, then it has to be long period of time that you can see the performance, because it's just copy the index. Okay. Okay, I think I need to just speed up. Okay, investing for round ups. You can see, right? Some of the features, like, you know, the number 4, they show you how much is your spending, about 30. How much is that? Cannot see. Uh, so how much is your spending, how much is the drawn out? So they will actually tell you where is the money. So in Rais, let's say your round out is your round out is 40 cents or 1 ringgit. They won't start investing. The moment it reach 5 ringgit, only then they will put into your investment account. Okay, portfolio. Like I say, it helps beginner investors to assign their portfolio as compared to your if you go to your traditional investment like unit trust, right? You if let's say you do it yourself, investor, you don't you go to iFast, or you don't assign any unit trust advisor that don't do, so you might invest in fund that is not matched to your risk profile. So but then for us, they already have uh portfolio assigned to you that you can choose. Either you want to go to conservative, moderate, or aggressive. Okay, and at any time you can actually change your portfolio. And even in we actually recommended you to review your risk profile every year. Okay. Okay. All right. So the second one is Best by Bank Islam Malaysia, Bank Islam Malaysia Berhad Investment Management. Is an investment management company. So it's also available through apps. They don't have round out. They have regular or lump sum investment. They also invest in unit trust, and the fund that they provided is also the fund that is offered by Bank Islam lah, Bank Islam Management Berhad. And they have the option. They don't have they have the option whether, like for Rais, you have to choose the option portfolio whether you are conservative, moderate, or aggressive. But for Best, you can actually choose portfolio like Rais, or you want to do it yourself, you want to invest yourself. And the minimum invest opening account is zero. Maybe you don't have to have a big, what we call minimum account to invest is 10 ringgit, but to open account can be zero. But the moment that you reach 10 ringgit, you can start investment. And because if let's say and then global equity fund is 1.8. So global equity fund, they have like collaboration with Arabes, a UK based investment company. So they have that kind of exposure. And Sukuk is similar like bond, but Islamic bond is 1.2% per year. Okay. And then the third one is go invest by Touch and Go. They I'm not say their fund invest in unit trust, but only in money market, and it's managed by principal. But they do have roundouts, so you can actually use your spare change to actually use, you know, your e-wallet, right? Memang you are using that for spending to pay something, so you can actually use your roundouts. You can set the roundouts, and then use that fund to actually start investing. Not investing lah, start putting in money market, because money market give daily return as compared to you put in banks, right? Banks give you annual return, and annual return also not so big lah, not so huge. So but then for money market, they give you monthly return. The dividend is given on monthly basis. So over the time, it will actually give a better return than compared to if you put your money in a saving account. Okay, so minimum amount is 10 ringgit. So this is their home screen, whereby you can just choose go invest. So they will verify your identification, everything, and you can start putting your money, your spare change in this account. Okay. I think this is my last slide. But I have touched it when I did my presentation. Again, begin before investing, begin with an end in mind. Set your financial goals, how much you want, when you want it, for what you want it. Because a lot of people just start, okay, let's start investing because everyone is investing. But when you don't put a specific goal or a specific time that you want to use, you don't have a purpose. When you don't have a purpose, then it's kind of, you don't have that drive to actually achieve your goal, right? So begin with an end in mind. And again, I think I have emphasis this, know your profile beforehand, so you know your risk tolerance. Before investing, create emergency fund. Because why? Okay, why do you need to have an emergency fund? Let's say, not even for youngsters lah. For those who are receiving this EPF or gratuity fund, right? If you don't have your basic emergency fund, if something happen, you put everything in your investment. If some, or you, the moment that you receive, let's say 500,000, okay, you don't have a specific goal. You start, expanding your house, renovating your house, buying things that you cannot buy before this, and then you start investing. But the moment of emergency happen, then where do you are going to touch your where are you going to withdraw that money? So the first thing, when you have that lump sum amount, that you receive a lump sum amount upon your retirement, right? It's good for you to actually set aside your emergency fund first. And then, only then you go towards your needs and then your wants, your lifestyle upgrade or anything. Okay. And investing is not saving, bear in mind of the risk, return, and possible loss. I think that's about it. If you have questions, you can actually post on the chat and Shane can share, or I can actually answer. I hope this session has been beneficial for you. Right, go. I pass back to Shane.
Thank you so much, Asna, for doing this segment for us so that we can understand about micro investment and how do we invest our spare change. If you have any question to ask our speaker today, please write your questions in the Q&A box here. Don't write them in the chat box. And I also noticed that Asna has addressed many questions along the way as she's look at the chat box to respond to that as soon as it pops up. So if you have any question, please write them in the Q&A box. I'm not sure if I answered this, but what about Wahid? Have you addressed this, Asna? It's asked by Kok Long. You're on mute, cannot hear you.
I've addressed it. But again, just let me address it again. Wahid is an investment apps, but I don't share it today because the minimum amount is 100 ringgit. But again, if you can afford, if let's say you're earning 5,000 and 100 ringgit is very minimal. So Wahid is a good alternative for your investment because it is invest in exchange traded fund. Yeah. So very minimal management needed, very minimal knowledge, investment knowledge needed. Yeah.
All right. Is it Sharia compliant?
Yeah, it is. It is.
All right. How about stash away?
Stash away is not Sharia compliant. So maybe Shane can do another for non-Sharia.
Okay, sure. All right. We have a participant who want to ask, what is round up? What exactly is round up? Because it appears
So
many
round
times on
up
the screen.
basically, yeah, round up basically, let's say you are going to buy groceries, right? Using your Maybank account, your May account, for example. So when you buy, you purchase your something lah. Bila apa-apa whatever that goods that you buy, let's say the amount is 34 ringgit or 35 ringgit 40 cent. So rounds up meaning that they round out the amount you pay to the merchant is 35. or if you use your e-wallet, right? Same. You pay using your e-wallet, and then like 15 ringgit. Then you set the amount. Let's say 2 ringgit. You want to or 30 ringgit. You pay 30 ringgit. You round out to 50 ringgit because 2 ringgit tu you want to channel to your investment account. So round out basically they round out the amount based on what you set. Yeah.
Okay, so the additional money will go towards the investment platform, yeah?
Yeah.
All right. Thank you so much. Um, the next question is by Azru. What exactly is a money market?
So money market, okay. Um, money market basically, okay, let's go. I'll give you an analogy. You deposit your money to the bank, 1,000 ringgit. So basically, the system work is the money that you save in the deposit that the bank has in all their customers' account will actually be loaned to another customer. So they give loan. Your deposit, they give loan to another customer. So money market basically, it's not loan. You put the money for investment, for investing in money market. So the money is being used to or being given to the banks or any of those who are institution, and in return because they use the money that you put in for investment, they use the money and then they agree for a monthly return. Actually they calculated the return on daily basis but they give it on monthly. So it's similar like cash deposit that you put in the bank, but bank they use the money, use your money and loan. But for money market, they use your the investors' money, not the depositor, the investor money, the pool of investor, and then give it to the institution that want to use the money.
Thanks for addressing the question of money market. So I guess we are all clearer on what exactly is money market. So Asna, currently the micro investment landscape only involve investment into funds, right? Be
Yeah.
it in the form of unit trust or be it in the
Mm.
form of ETF. Are there any other investment products that they allow you, micro investing allow you to invest in?
Um. So far, not that I know of. The one that actually the market that the in Malaysia market that I have researched on, right, for the Syariah one is these two only. Yeah.
Hmm. Okay. So these two are the only uh, channels that we can invest our spare change.
Yeah. Maybe in future they will develop, but I'm not sure. Yeah.
Mm. All right. If any other questions, you may write them at the Q&A box. Yeah. Oh, I think Astro asked a good question. For all these micro investment platforms that you just shared, um, for the deposit that we put in, is it protected by PIDM?
No, because one is investment. PIDM is for deposit, but yeah, it's not protected.
Mm. So
Mm.
PIDM protects savings account, right?
Yeah.
Yeah, not investment account.
No. And
All
even
right.
if you put your money in your bank, also they have a limit of 200,000 only. If you have 2 million, they don't cover the remaining lah, unless you put 200,000 in different banks. Yeah.
Okay. Great stuff. Any other question? Maybe let's do a little bit of survey. How many of you here have already started doing micro investing through one of the platforms that Miss Ansna mentioned? If you do, you type me, M-E. If you have not, you type no, N-O. Wow. Okay. Many of you here have already started doing micro investing.
How is it so far? Those who say yes, right? How is it so far?
Do you have a decent return? I'm someone who have not started yet in micro investing. I actually did not check, the return from all these platforms. I don't even have a touch and go plus yet. Maybe I
Maybe
should
it's
start
time
one.
for you to start with lah.
Low return, low return probably. I am guessing that you pick this low return fund like money market fund.
Hmm.
But of course, if you do micro investing, if you just started out, you can't expect to make huge return yet, because the startup capital could be not as big as you do a big lump sum investment. But uh, slowly and slowly, you may have a snowball effect.
But it's a good starting point lah, rather than you don't start at all, right?
Yes, that's right. So the next question by Ting Sing is, for this micro investment, do you think that it can beat fixed deposit? I guess it's referring to return.
If you would choose aggressive, it can lah. But then fixed deposit, the characteristic is it's fixed, meaning that you have to hold a certain period of time, and it's illiquid, not illiquid lah, but then you have to adhere to the time, whether it's 1 month, 6 month, or 12 month. If you are looking for like a higher return with FD, right? For sure, you have to hold like 1 year or 3 years. But accessibility, liquidity is very low lah in that case. And micro investment have better access. Uh, you have actually, again, go to portfolio lah. You can have FD at the same time. You also can have micro investment. The function is different. The roles, the function. You use FD for what? For you use for micro investments is for what? Sometimes people actually invest not invest, put money in FD because they want to actually have that collateral attached to it. Or yeah, so it doesn't mean that one is good or better, because it depends on why, with the purpose of that that uh financial instrument. Yeah.
All right, thanks for the clarification. I guess the landscape for micro investing now is being developing. I mean, it's under development. I guess when it become more mature, there will be a lot more selection of funds that you can purchase through all these micro investing platform. Maybe in the future we can have a unit trust on REITs, right? So that can help us to buy invest in properties, not only in Malaysia but also around the world. So we'll see. Okay, whether we have any unit trust fund that invest in that do REITs or ETF that invest in REITs, right? Now I think recently I also read the news that Touch and Go is collaborating with Bursa Malaysia and also Afin Huang to roll out, uh, trading through the Touch and Go app, right? As through Afin Huang as a broker in the Touch and Go app. And I think our Prime Minister Anwar Ibrahim has also announced that they are looking into allowing buying shares not on board lot basis but on single share basis. Okay, and I think that will open up more avenue for us to do micro investing. Instead of buying one standard lot, one board lot, we can buy one share. So what is your view on this, Asna?
Good lah, more diversification. You know, because again, over the period of time, the product develop, right? So your knowledge and your sharing, or your knowledge and also your experience in investment also grow. So first you know about money market, and then you know about unit trust, and then you know about exchange traded fund. Now you know about stocks. So the more you know, actually, it actually build up your confidence. It build up your habits of investing. It build up your confidence to invest in a diversified asset class. So if let's say it's ready, then maybe it's a good alternative lah for people to give more offering.
That's great. So looks like there are no more questions on my panel right now. So maybe Asna, you want to give some concluding remarks before we wrap up this session?
I'll say micro investing is something that actually you really want to consider, especially if you are new and you haven't started investing. Build up your confidence, build up your habits, and then over the period of time, set your goals and review your performance. You just put it as one of your investment portfolio. You can also after that diverse into unit trust, private mandate, structured like FCPO, but it you will learn over the time now. So start. The most important thing is start investing. Yeah.
All right. Thank you so much, Asna. I think one of our participant here, Ezra Roslan, also echo what you have just said, which he said that micro investing is a decent and good for beginner. All right. Thank you so much. So, ladies and gentlemen, you just heard from Miss Asna Ashad, who is a licensed financial planner with Philip Wealth. All right. Thank you so much, Miss Asna.